Hey everyone, and welcome back to another Tesla weekly video for today. I hope you're all having a wonderful weekend so far. So let's talk about the current state of Tesla, the company and the stock. There's a lot of noise around Tesla, EVs, Elon Musk, X, and so that might impact investors in that company. Now in this video, we're of course going to go over the numbers out of China, out of Europe as well, and a couple of other announcements. Now first up, I want to talk about Tesla, the stock, which as you can see right here is trading at 60.5 times forward PE, 5.4 times EV to sales in the next 12 months, and 34.3 times EV to EBITDA also in the next 12 months. Now, as you can also see, the analyst expectations for fiscal year 2024 are extremely low. And that's for a good reason, whether you like it or not. During the latest earnings call and the earnings report as a whole, they weren't that positive on 2024. And so the sales expectations are that it will grow 14.67% year over year and EPS only growing 2.61% year over year. And so if you look at the stock itself year to date, we can look at this, it's down 22%. You might say, oh, but they're only short-term thinkers, etc., etc. Yes, analysts on Wall Street look 12 months out. And if 12 months out, they don't really see that much upside, then a stock that is and has been always quite richly valued is going to get hit. It certainly did not help that the earnings call just didn't provide that much information, right? It's all about communications. If you think it's going to be a bad year, then fine. You can say, we think we're going to struggle in this and that area, but we also think that XYZ will happen. We're also doing XYZ to attack those issues. You have to manage, you have to play the Wall Street game. Of course, we know from previous years, Tesla doesn't really play the Wall Street game, and the stock itself over the last couple of years has done quite well. Unless you bought in the last 2.5 years, stock hasn't done much besides going up and down, and now down again. Now, moving forward, fiscal year 25 and fiscal year 2026, reacceleration of growth is expected. So in fiscal year 2025, sales is expected to grow 21.39% year over year and EPS 37.47% year over year. As for fiscal year 2026, sales growth of 15.61% year over year and 22% growth for EPS. So yes, fiscal year 2024 is expected to be a year of basically nothing, and so the stock will definitely reflect that. At least it is reflecting that right now. Maybe towards the back half of this year, we're going to have rate cuts. Maybe demand will increase. Maybe some extra things will be announced. Who knows? Then suddenly going into 2025, the sentiment around the stock will become a bit better. I can be completely wrong and things can go wrong anytime this year. But right now, this is the sentiment for the market. And so if we look at the price targets, you can see that after the earnings report, price targets basically have been slashed. So the average now sits at $213, which represents around 10% upside from the price we're at today, which of course can change quite fast. If suddenly in the next 2 quarters or so, Tesla becomes a bit better with their communications, things are becoming a bit better, they're having some momentum inside the business, whether it's from car sales or the energy side of things, then suddenly you will see analysts upgrade their price target and that average goes up. Usually, sentiment follows price, as you've seen with Nvidia. Stock price suddenly skyrockets and all the price upgrades follow. Probably the same will be said about Tesla 12 months from now. Now, before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, let's have a look at the numbers out of China. The China insured weekly numbers came in at 10,600 insurance registrations for the week of January 29th to February 4th. The quarter is up 10.4%. Year to date, we're actually up 33.4% year over year. As for the model mix, not surprising here, Model 3 still around the same number week over week, a bit lower, just like Model Y, because this week is a bit lower than one before. Now, just so you know, in China, they have their New Year's right now, so don't be surprised if next week's numbers are much weaker than the one we've got right now. Then as for China sales in the whole of January, that number reached 39,891 sales. That's the second best first month of a quarter ever and 39% versus the previous one. It's also the best January ever. And as for the mix for the whole month, 75% were Model Ys, 25% Model 3. As for the export numbers, Tesla Giga Shanghai exported 31,556 cars in January. And so, overall, Piloli here, again, with the great numbers, Tesla sales in January sorted by volume and with year-over-year and quarter-over-quarter comparisons. As you can see here, by the way, with regards to China, the real number is 39,900. That's up 49% year-over-year and 39% quarter-over-quarter. Now, I highlighted here a couple of countries in Europe that usually we look at because they are quite big with regards to their volumes. Germany, year-over-year, down 26%, quarter-over-quarter down 6%, so the weakness there still continues. With regards to France, we've seen the opposite already. Year-over-year, that's up 321%, quarter-over-quarter down 4%. With regards to the UK, quarter-over-quarter down 41%, but year-over-year we're up 173%. So that's why he says here it was the best January ever for 25 out of the 30 countries. And then as for the rest, you can pause the screen and look at it. Moving across the ocean to the United States. So Tesla was the fastest growing car brand in the United States back in 2023. It jumped from the 12th to the 8th place. So again, this reaffirms the sentiment right now. Yes, 2023 was a great year, which is also why Tesla stock was much higher than where we are at today. 2024, management predicts would not be such a great year like 2023, and the stock reflects that. Now, one of the ways or one of the things that a lot of people have been crying out about, speaking out about, myself included, I'm a bit 50-50 on that, is Tesla advertising, right? Tesla should advertise, Tesla should educate the public on electric vehicles, on why people should make the switch. Okay, I've been a bit yes, no, interest rates are high, that's one of the main reasons why people are not buying EVs or cars in general. Can marketing increase sales? In my opinion, yes. Now, Tesla has been trying out a couple of things. They're now in Chicago in the auto show. They've been advertising on Google and YouTube. And more recently, they've been advertising on X as well. Now, some people might say it doesn't make any sense why advertise on X since most of the people that own a Tesla or have Tesla shares are on X. I don't think that's true. But then again, I mean, they're trying out new things. So let's see how that works out. Now, moving on to Giga Berlin, we've got some comment here from the plant manager with regards to the restart of production at Giga Berlin, which was halted because of supply chain issues, because of, well, the terrorist attacks in the Red Sea. So the supply chains are intact again. Parts are available in sufficient quantities to be able to restart completely. The temporary production stop will not set Tesla back in the further ramp up of the factory. Production will restart on February 12th. They might have also used this time to maybe upgrade the production line, remains to be seen. Now, one extra thing I want to talk about is the fact that, well, right now, the sentiment around EVs and around Tesla specifically, maybe the stock as well, is pretty negative, right? Even from some bullish investors, the sentiment is pretty negative. Again, makes sense. Start of the year, stock was a bit higher than it is today. It's down 22%. Price drives sentiment. But if we're looking at this picture right here from Alojo on X, among companies reporting Q4 free cash flows, GM leads on total free cash flow for Q1 to Q4 2023. Then if we move over to Q4 specifically with regards to free cash flow comparisons, what can we see here? Well, Tesla, by the way, this is number 485, is the deliveries. So for every other automaker, it's the same thing. Deliveries is the number above. The number below is free cash flow. What can we see here? In Q4, Tesla alone had more free cash flow than all the rest combined. And remember, Tesla is the only pure electric vehicle maker from the bunch. So yeah, there is noise. There is some reason for the stock to be down, but there is also a lot of reasons to still be quite positive and bullish on the company, despite all the, let's say, negativity around what's been happening on X and Elon tweeting and electric vehicles and politics and this and that, sometimes you just have to mute out all the noise and actually look at the numbers. And yes, sometimes in the short term, you are going to take a hit. Tesla is the number one position in my portfolio. So yes, I've started the year on not such a positive note, since that's the majority. Well, not the majority, it's 30% of my portfolio. So when Tesla is down 22%, my portfolio will not be doing as well as others. Now, looking at the graph right now, Tesla, this is on the weekly, by the way, we're now 2 weeks of green candles. Maybe we might see a reversal starting to happen. Could be, but we're still under that, 2-3 year downtrend. At the end of 2023, we tried to go out of that trend, but did not succeed. Then, of course, earnings report didn't help at all. Went back down at around $180. That's where the stock found some buyers, as we've seen previously happen as well. $180, $175 or so was where we found quite some buyers. Could it be the reversal? Maybe RSI did have a little jump right here. Let's see if we can continue that momentum and maybe start challenging that 20-day moving average, which right now sits at around $203. The 200-day moving average still sits at around $230. So overall, to conclude, of course, the start of the year for Tesla stock has not been great, especially if you look at the overall market. Overall market is up. Tesla is down 22%. Yes, there is a lot of noise with regards to EV, with regards to Tesla specifically, and with regards to Elon, X, etc., etc. It's a package deal. You either take it all or you do not. But this is not something new for Tesla shareholders that have been with the company for a couple of years. There has always been ups and downs, ups and downs. Yes, more recently, because of the acquisition on X, you've got even more noise, more negativity towards Elon Musk. Now, of course, with the compensation plan, the ruling there, it adds even more. It's election year, so yeah, was to be expected. But overall, keep looking at the numbers, keep being patient. You're here for the long term and not to make a quick buck for the next 12 months. It's just my opinion. To share yours down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.